What is up, guys? This is KOJOFOREX, aka GBP Emperor, aka Emperor of Blues. In today's analysis, I have a very simple breakdown for you guys. How I literally made 2,500 within a span of an hour on the market, right? Even though this trade has potential of making me about 5,000 or even 10,000. But yeah, I'm going to not waste much time at all. Go straight into the video breakdown, analysis of the trade setups that I was looking at. I caught them, sent it out to the trade community, and then how they also caught on to make that money. Very simple breakdown. I think I've shed a little bit of light on this kind of setup before, but if you do pay attention to it and then take it extremely seriously, it could actually do change your life in this market. So without wasting my time, let's go right into the chart. I'll break it down as easy and simple as possible for you guys. So guys, if you're watching this, you can clearly see on the right side of the chart that I have all my watch lists here, and then I've flagged some of them on the red folder and then the blue folder, or the red flags and then the blue flags, right? So the little trick I'm going to show you with trading views that, look, I can literally, like, untick all these flags here, right, and then tick them back. But the interesting thing again is that these flags are not only just molded in the red color and then the blue color, they have different variations of colors. So all you have to do is click it like this, then you have a variety of color to choose from red, blue, green, and so on and so forth, right? So with me personally, I use the red to mark currency pairs that are on my hot list, right? Hot list means that they are likely to be coming into a shape or fashion that I'm looking to trade. And then once I place a trade on any currency pair, then I take it with a blue flag, right? So blue flag means that I have my eyes on them. So I recently just had my watch list on the GU, Euro USD, USD Swiss franc, and then the XY being the confluence. So when I come to the watch list of the blue list, then you can see that these are the ones that I had my eyes purposefully on. Right, now let's go right into the chart. If I come to DXY, now you might have asked, well, by now know the use of DXY in my analysis, which is I use it to measure the strength of the weakness of the dollar at any point in time, because DXY is basically a basket of currencies compared against the dollar. I recently just posted the currency pair that constitutes the percentage of involvement in the DXY. So if you're not following me on Instagram, it might do you best to follow me at KOJOFOREX, because I post some of these kind of informations out there on Instagram for free. It may go a long way to help your trade analysis, right? Now that we understand the purpose of the XY, you only want to understand that you can analyze the XY the same way you're going to analyze any currency pair as if you're about to trade it. I think I shared it in most of my previous videos. If you haven't watched that, click in the videos as well and then do watch them. They're going to go a long way to help you as well, because I kind of see the XY purposefully as just leading me on to know when there's going to be a strength or weakness in the dollar. I analyze it as if I'm about to take a trade on it, right? So if you can see here, we've had certain nice formation on the DXY chart patterns wise. We had this kind of a triangular pattern, and then it started creating this kind of high low formations until it eventually hit all these high, right? Which if you trace all the way back there, it kind of very much equates with some previous high that was created so many years back. I think in the year 1978, right? These highs that you're seeing here equates to the year 1978. If you really want to cross check that, you can come onto like the monthly time frame, or perhaps the 3 month range, and then you would get what I mean, right? So if you see here all these highs here, it kind of equates to these highs here, which was, like I said, is actually even 1973. So yeah, I use that to plot and then realize that, okay, the SY could be coming into certain key areas that it had reacted on so many years back, as far back as 1973. So I still regarded that region as a likely region for the market to start reacting in the opposite direction, and then we can clearly see that it actually started doing that. Now upon doing that, the market did close here, which was last week. We had the market closing exactly here. Now with the market closing here and then opening up for a new week with this new vertical line that you can see on my chart, then now what would I have anticipated with the market? You can clearly see that for a market to change direction, then we must be convinced enough that the last lower high has been significantly taken out if it's in a downtrend, or the last higher low has been significantly taken out if it's in an uptrend. So I wanted to be confirmed that the last higher low, which would have been this one, would have been taken out, but nonetheless the market had not traded anywhere close to it. And then we must also change character. And then if a trend must change of character means that as far as the market is making highs, lows, higher high, higher low, higher high, higher low, a change of character would usually have two formations. One is that the market can come and make an equal high before it actually drops. That way you know that what the bulls were not so strong enough to come and overpower the bears in creating extra new high within this range. That's why they were able to create that equal high, and then the bears actually they take over, right? Then the second characteristics is that rather than coming all the way up to create this equal high, the market will now create a lower high, right? So you could perfectly measure that lower high using retracement. It could be the 61.8 retracement, 78.6, or even the 50% retracement, right? So if you're supposed to have a 50% retracement, it means that for that market formation alone, the market was not able to supersede the previous highs that it has been creating, right? So you can see it's been creating rising highs. But getting onto this point, instead of creating a continuous rising high, which I'll use this dotted point to signify, then it couldn't create those rising highs, but hits a particular retracement level and then starts to sink all the way down. So with DXY hitting this high range, where I kind of personally felt that it had been overly extended in that bullish move, and then it was just about time it changes a trend, then it was okay for me to kind of pre-anticipate levels in which it was going to start showing characteristics of a trend change, right? Which is like now expecting that rather than coming all the way up to create a new high, then we could do two things: either come back to this previous high here, which is denoted by the wick, and then come all the way down, or create all the way down this lower high formation and then intend to create this lower low formation. So that was just exactly what I was expecting. And then with the market opening in that week, then I anticipated these key fib areas right here. So this one denotes the area or region between the 61.8 retracement and then the 78.6 retracement, and I also shaded these regions signifying that equal highs I would have been expecting in the resistance region. Now with the market opening here, there was no significant reason for me to have known that the market would have just instantly be reversing, because it was just the beginning of the week and then start anticipating that it was going to buy. So that's why here had no reason to even set itself up as a trade setup for me in terms of using it to gouge as if the dollar was going to be strong. But as a sniper, you got to mark your moves as if something is about to happen in the market. So that's why I pre-anticipated that. I don't know for a fact that we're going to reject there and start coming up, but let me just anticipate it. Let me create a thesis around the market as if it was going to trade there. So you'd see that in my Telegram community, which I also recommend you to click in the link in the description to join. I posted out there in the Telegram community that I'm actually anticipating the DXY to come and tap into this key area, which is the 61.878.6 retracement, and then make a move down, or come into these resistance regions and then make a move down. But we can clearly see that nonetheless the market had its own plans, right? So it actually didn't fulfill that anticipation or pre-anticipation that I had in mind, but it actually did trade all the way down. So you can clearly see here, if I use the replay button, that it kept trading all the way down. But upon trading all the way down, it came onto a next stumbling block, which is this trend line that I have across here, right? So upon coming into the trend line, then I was faced with a dilemma that maybe the market didn't want to, just start trading all the way up right from the opening, but perhaps wants to use this trend line as a, because you can see here, it starts from here, this first touch, the second touch, moving all the way up, and then perhaps coming into this third touch region before making that retracement. So then again, I didn't decide to conclusively decide that there was going to be a strength in the dollar, but observe market reactions, which is what I advise you to have, which is utmost patience to see finally what the market wants to do before you make any sort of a judgment. So upon coming into this region, you might as well easily think that, well, then the dollar is about to show some strength, but see what clearly happens. We see that what? It sharply breaks that region, breaking the trend line as well, and then literally invalidating that whole range. So literally invalidating the trend line. Then beautiful thing about the market is that once a particular level is broken, then the market tends to head towards a next possible level, which technically we call the path of least resistance, right? So path of least resistance literally just means that once the market breaks a stumbling block, it goes next to the next stumbling block. It's over and over transitions, right? So it's just how the market works. Once you clearly have a very thorough understanding of the path of least resistance, I can clearly tell that you are a step way ahead in the market. Then my next part of least resistance for this was basically this psychological level here. So you can tell that with me, I have some key horizontal lines all across my chart, typically representing my psychological levels, right? Key levels in the market where I believe that buyers or sellers are going to come in the market, and I use practical human psychology around those psychological levels. I've explained it in the previous concept before, so think about, let me give you a very slight example of why I denote these psychological levels. Like if you want to sell a mobile phone to a friend, I'm not sure you're going to be quoting price code, let's say like an iPhone of, okay, I'm going to sell it to you at 17.3127. You're going to say, I'm going to sell my iPhone at $2,000 or $3,000 or $2,500. Usually quote like a round figure to the person. I believe that the market also do react to rounded figures in the market. That's why I take those key levels very seriously. So then I anticipated that this psychological level, which also represented a round figure of 106.50, could be finally the level in which the DXY could be showing some strength. But if you look here, we had that first bullish push, right, which is like that big drop and then a push here, which I always say in almost all my Instagram live and then videos, that is also like the first trick of the market, getting you to feel as if after this very big drop we are just about, you know, going all the way up with that small move. But if you think about it psychologically as well, and then if you think about it realistically as well, the market is not going to drop with this big bearish move, and then you have this small bullish candles supersede the strength of the bulls. So usually I take my time when we have a region like this in the market. So I take my time in the sense that I want to see extra confirmations or extra, you know, boost in that area to know that the bulls are present in that area. So if we play, you can see that after that push, the bears started pushing the market all the way down as if the bulls were totally nowhere to be found again, and then came to tap clearly into this region. So tapping into this region, then it had just, if you go into the lower time frame like the 1 hour, made that double bottom again, right? And if you know anything about double bottom, that's just right about the time where you want to be confident in taking a trade, because then if it actually holds here as a support region, then you get one of the finest entry. So that double bottom clearly did convince me that the bulls are in power now, and then we're about to observe some bullish price action on the DXY, which also transcends to mean that there's going to be strength in the dollar. Also, if there's going to be strength in the dollar concurrently, what should you expect? You're going to expect that it's going to trade very strongly against the pound, very strongly against the euro, and then trade concurrently with the USD Swiss franc. So it only meant that I would be looking for a sell setup in GBP USD, which had already also created a double top around here. You can see that it had also traded all the way here, pulled back a bit, came back again, and then literally just pulled all the way back, currently selling off. And then we can see similar price action with Euro USD as well, right, which is it just went up there, pulled back, came back up, came down, and then now it's trading down. And then you can see from USD Swiss franc the opposite of it, which is literally making that price action reaction here and then going up. So I did send out all these trades to the community members, and then for myself I personally profited 2,500, which is partial profit that I took, even though I still have some partials still running out here, just about $1,000. So you can see the $1,000, and then just to show you, it's a real account. That's the KOJOFOREX Emperor of Blues account. You can see that. You can clearly see from here that I have 1,100 floating profit already booked, partial profit like I told you, and it's come from the Emperor of Blues account, which is also right here like that. So that basically summarizes the trade setup that I took to make money, and then also decide to head off to, you know, the shooting range to shoot, you know, some real life sniper entry, which I'll be doing a vlog to show you guys about my experience in that shooting range. It was a very fun vlog. You guys are gonna love it. Probably upload that video tomorrow. Without wasting much time, I hope you guys did follow through, learned a lot. If you didn't really understand this, replay this video. I really recommend that you watch it about 2 or 3 times. It's gonna blow your mind if you totally understand what I said there. So yeah, make sure to smash the like button if it was very intriguing for you. Make sure that we hit about 1K to 2K likes so that YouTube is going to recommend this video to other traders as well. And then yeah, like I said, connect with me on all social media at KOJOFOREX. Click in the link in the description to join XNET, my favorite broker, the one that I'm actually trading on, tighter spread, instant withdrawal. You're going to definitely love it. Subscribe to this channel. Let's hit that 90K. We're approaching 100K gradually, and I really appreciate you guys for making an effort for us to hit that 80K. Without wasting much time, I'll see you guys in the next insane YouTube lessons. Peace.